Good morning. This is Bill Biederman at the Allendale Trading Desk. It is March 26th and a lot of volatility today. The EU's meeting that we told you about will be held Thursday and Friday. This will be when they formally tell Greece that they will not be able to finance them at a cheap rate, forcing Greece to go to the IMF funding. And also today, Greece and France agreed to the IMF funding for the Greece bailout. So that really stabilizes that direction for the EU. Well, this is causing a little bit of a ripple effect. EU top officials said today that they are concerned about the stability of the Eurozone, and Portugal's sovereign debt was downgraded today, and the Banco Santander stock was down 3.7%. So that's causing money to flow out of the Eurozone and into the U.S. markets as a safe haven, causing the dollar to reach the highest price traded since May 22nd, 2009. We're trading at 82.04 at the time of this recording. That's up 92, and that's certainly having a breakout effect on the chart and also having an effect on most commodities, pushing them lower with the stronger dollar. Gold today is at 1092, down 12. There is support at 1080 and resistance at 1126. The crude oil is at 80.60, which is down $1.32. That's been in a recent trading range between 79 and 84. Corn market this morning down 2.5 cents, sitting on absolute key support at 360 in the May contract. If they take that out, we'll see some technical selling as long positions are threatened and they just bail. Acreage and the stocks report next week will continue to be the focus of traders. And then the weather. And the weather, we had a 30-day forecast come out last night that looked favorable for field work in most of the Corn Belt. So that is another reason to be seeing some pressure on the corn market. Soybeans this morning down 8 to 9 cents at 9.52 is very key support for May soybeans. If that doesn't hold, we could see a sell-off to 9.20. And what we've seen in the corn market is 6 or 7 days of upward strength was taken away with just 2 days of down. So the down moves in these commodities is much faster than the up moves, and that's the threat that the bull position has. Now, the focus remains on the stocks report in soybeans. That's expected to be bullish. There's very few beans left out in the country. A lot of farmers have sold their inventories. So that has been providing support in the old crop beans. The acreage report will be the other focus of next week, and that is expected to be neutral to bearish. And with the better weather forecast, there's no reason to believe that we won't get those acres unless we just lose those 4 million called ghost acres that USDA usually adds or subtracts from year to year. Also in the soybeans, the Argentine strike is official at 2 terminals in San Martin. The rumor is that this strike, they'll be on a 1 to 2 day worker strike and then back to work. Typically, South American strikes do happen while they continue to work. The next work outage is expected to be right around the Easter holiday. There were cuts in rapeseed production around different countries. We did note some of that yesterday in our research reports. China, Ukraine, Canada, and a couple other countries will see some rapeseed and rice cuts due to weather, but nothing significant to world stocks. The wheat market, as we mentioned yesterday, there's just no demand other than routine business and a little bit of donation business, but there's just too much wheat around the world to be bullish wheat. In the cattle, we're calling those about 10 lower. We're siding in towards caution here, the very volatile market, so traders tiptoe around that market and just use your chart points at 93 and 96 and trade accordingly. But hedgers should be hedged up 100%. In the hog market, we're calling that down 20 to 30. The market in the range of the Aprils is between 71.50 and 74, and we're down at the lower end of that, so it might be worth a stab at taking the long side of this, but obviously you're going to want to keep your stops very tight, and that's a great way to trade. Just keep your risks limited. Now, we have a lot of recommendations. We aren't giving those here on the video. We want you to look those up on our website. That's allendale-inc.com, and then go into the advisory report, and then go to the closing comments, and you'll be able to read that. If you don't have a subscription, you can try a free trial Just when you go to the website, then just look for subscription choices and click on free subscription. That'll ask you for your credit card. There won't be any charge. We just use the same mechanism for subscriptions as we do free trials. That's all. If you have any questions about that, give us a call at 800-2-MARKET. That's 262-7538. Have a great trading day.